Hello, everybody. It's Tuesday, March 17th, 2026. Of course, St. Patrick's Day. Happy St. Patrick's Day. May you have the luck of the Irish today. May you drink green beer or something else. Remember, I am Hammer, founder of Originator Success, Grab and Go Social, and Rate Sensei. That's right. I have multiple different products to help you to build your business as a mortgage originator in 2026. Originator Success will help you get found online, stay in touch with past clients, agents, and more prospects, and generate reviews. Grab and Go Social is all about, you guessed it, social media. And Rate Sensei is all about rates. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time on Facebook and YouTube, where I broadcast to you. This morning, let us start with a lovely Irish blessing. May the road rise up to meet you. May the wind be always at your back. May the sun shine warm upon your face. The rains fall soft upon your fields. And until we meet again, may God hold you in the palm of his hand. So that's one of my favorite little Irish blessings. And they say it really doesn't go back all that far. It was actually created not too long ago, but it sounds like it would be like Old English, doesn't it? Doesn't sound like that. So, all right. Well, today we will be talking, of course, about what's going on in Iran, prices of oil, and what's going on with mortgage-backed securities. Good news. We have seen quite the happy start to the week. Yesterday, we saw bonds doing really well. Today, they're up 11 basis points or 12 basis points at the moment. So a good start to that. We'll go into more details all about that. Remember, if you would like to join me live and you want a reminder each and every weekday morning so you don't miss any of the show, sign up and get your text alert at hmmr.io/reminder or use this cool QR code over here. You get a free text alert. There is no strings attached. We don't sell your information, no trigger leads, nothing else. So go check those out. If you're here this morning, say good morning, all of my live friends. If you're watching on the replay, give me hashtag replay in the comments. Let me know that you were here. I only see a handful of those each day. So either only a handful of people watch the replay or only a handful of people actually put hashtag replay in the comments. Not quite sure. Remember, your comments help with the engagement. Always appreciate your help with that. So let's see. Mr. Ron Siegel says, today is St. Patrick's Day, National Corned Beef and Cabbage Day. Tomorrow is obviously Beano Day because of the cabbage. I get that. So let's ask that. Let's have a question of the day. Do you eat corned beef and cabbage? Do you eat corned beef and cabbage? That is a question of the day. Let us know in the comments if you're here live. There's about 27 of you on this morning. Let me know in the comments. Do you eat corned beef and cabbage? We'll come back to that one in a little bit. So let's go ahead and get started. We will start out with the technicals. Let me go ahead and share my screen. And here we go. So like I said, mortgage-backed securities are currently up a few basis points on the morning. And we've got a nice start to the day. Currently up 13 basis points, 99.41. You can see here, right here, we've managed to string together two green candlesticks. Remember, red, when things go down, red is bad. Down is a frown. And when we go up is green, and green is good. It puts a smile in the hood. So we are happy to see that we have two green days in a row. Today being up 13 basis points on the day. Take a look here at the 10-year Treasury yield. It is also falling. It is at that 4.20 mark. Remember, 4.20 is a line in the sand that we want to be watching. That's actually really important. If we break below 4.20, it really could open the door to see things kind of return. Now, what's surprising is if we go ahead and take a look at oil prices, though, you will see that oil prices are still high. We are seeing bonds improve despite this. And part of why that's happening is this headline right here. S&P 500 rising as market continues to rebound from the Iran conflict turmoil. So generally what you're going to see happen, it used to be that when stocks did well, bonds would do poorly, and we would see that kind of relationship, but that's not really the case anymore. We don't see it that way. So you're seeing stocks rally. You're also seeing bonds rally. This is a very different start of the week than what I was expecting. I thought we were going to, possibly see oil go back up to $120, $130 a barrel. And we would see rates continue to worsen. So thankfully, not going the way that I was expecting. And once again, what we're looking at was yesterday a turning point? So you could see right here on Friday was the weakest day. And hopefully that was a turning point. Now, you could argue about some of the technicals here and how the 200-day moving average played in. The technicals really were not the reason that we would see that. Again, you're seeing this kind of a reaction right here where we're seeing, that let me adjust this so that you guys can get this on the screen. It's the same as my head here. Actually, you know what? I should probably, let me go like this. How come that doesn't, I don't like that. Nah, I don't like that one either. What about that one? Then I'm little tiny, teeny tiny. There we go. Smaller me. I could deal with that. Hold on a minute. I'm messing with stuff. Sorry, y'all. Just having some fun here as I mess around with this. So anyway, I'm going to go back to, no, not that one. Let's go to this one for now, just so that I can show you the full screen. How's this look on the phone? I'm going to have to look and see how this looks on the phone. So right now you got S&P 500 rising as the market continues rebounding from the Iran conflict turmoil. Live updates. And that's a lot of that, even though Brent crude still above $100 a barrel, you're still seeing a nice improvement in bonds. Yesterday, we were up about 38 basis points to end the day. This morning, we're up another 10 or so. So those are all good things, Now, here's the thing, right? Now, we possibly hit the bottom last Friday and a much more positive outlook, but only if it holds. But, we'll see. Volatility is still a concern. Go ahead and answer the question of the day, and then we'll come back to it. Do you eat corned beef and cabbage? I'm also going to throw the lock advice down at the bottom. Right now, we are cautiously floating to see where things go on here. Rate sheets today should improve. I wanted to show you something, though. Take a look at this. See on Wednesday, March 11th. Let me make this full screen so you guys can see this a little clearer. See on Wednesday, March 11th, we were at 99.28. Okay, 99.28. Remember that number, 99.28. Well, yesterday we ended the day at 99.26. Why am I showing you last Wednesday and yesterday and how these are basically the same level? Well, I'm showing you that because if you look at rate sheets, last Wednesday, Matt Graham showed us ending the day at about 6.25, and yesterday we were at 6 3/8. So there's an eighth of a point in difference in rate between these two, even though arguably in bonds they were the same. Is that making sense for y'all? Do you see that? What that shows us is that lenders are definitely pricing more conservatively right now. And that's why you would see, even though arguably bonds were at the same level, there was a difference of an eighth of a point in rate on what you would see on the rate sheet. That means that they're holding some back, and that's not like an accusatory. Oh, you guys can't see it if I put it this way. Son of a bitch. Let me bump this over. I gotta remember that. Okay. So here you go. 6.36, 6.24. So that isn't an accusatory lenders are evil kind of a thing. It's we've got room to see rate sheets improve from here. If we see bonds improve, we could see rate sheets continue to improve. And that's what we want to get. Also, it looks like markets are starting to kind of get used to this number of, I'm going to call it like 3 figures, or, it's actually 5 figures, right? A 5-figure oil number. Whereas we were at like 65 a barrel, which would have been 4 figures. Now we're at 10 something. So, but markets are kind of getting used to that. Even though it looks like this conflict with Iran will continue for a while, markets look like this is right now the worst levels that they're expecting to see. If that stays that way, there's optimism that, number one, some of the ships are getting through the Strait of Hormuz. There's also optimism that the IEA, the International Energy Agency, could release more reserves for oil. Those two things are helping to keep oil prices in check, also helping us to see bonds improve. And that's kind of where we're at on this. So reprice risk on the day is moderate. Oil prices have seemed to have leveled off, which is helping bonds. There's really not much that we have to worry about what's going on today. Of course, tomorrow we get the Fed meeting. Tomorrow we will definitely talk more tomorrow. We'll discuss all the changes about the Iran outlook. We will dive deeper into what to expect from the Fed meeting then. So we'll save that for tomorrow. I'm not going to go too deep into it now, but basically, nutshell version, market's expecting zero chance of, hold on, I got to move this over. There you go. Market's expecting zero chance of a, really, why did it do that? Son of a, some of the auto snaps can be a pain in the ass when they auto snap, and I don't want them to. So anyway, for the third time, markets are expecting rates to remain unchanged tomorrow. We do have a Fed article about, what's going on in the Wall Street Journal. But again, we're seeing improvement because there's ships getting through the Strait of Hormuz. I don't even think that they're sneaking, because the one that they talk about here, the Karachi, had its tracker on. So it wasn't sneaking through. It actually got through. So we'll see what that does. All right. Also, so again, stocks globally are sinking, even if the U.S. shares are holding up. But the U.S. shares are up, which is why we're seeing improvement. And no sign anywhere that we're going to see things end anytime soon. Israel claims that it killed Iran's security chief. Again, nothing's showing anywhere near a ceasefire, right? So markets are having another jittery day with oil again climbing on the Iranian strikes. Hormuz worries. U.S. futures pointing to a drop on Wall Street this morning. Prices for refined products such as jet fuel and diesel oil are even more vulnerable to the Iran crisis than crude oil. And diesel's up over $5 a barrel, which is sick. Ugh, crazy. So, but looking here at what we're at and where things are at, again, this is, if we see this continue to drop down, falls below $100 a barrel, that's going to be all good stuff. So, all right, well, that's kind of it. Let's see your answers. Question of the day. And I'll leave the lock advice up this way. Question of the day. Do you eat corned beef and cabbage? I do. I enjoy me some corned beef and cabbage. Let's see what you all had to say in the chat. Angela says, yes, she loves it. Doug Adamchek said, hell yeah. Give him a good old Reuben. Ron is getting his in the crock pot right after his radio show. Amber Moser, absolutely not. Let's see. What else we got? Anyone got some fun plans for tonight? Ron pointed out ADP number today is really weak. Remember, the ADP now doing a weekly. When you looked last week, 15.5 thousand, 4-week average today. The 4-week dropped to 9,000. Must have been negative on ADP the last week in order to make the average drop so much. Yes, so weak labor market. However, doesn't matter. It's not going to matter with the inflation concerns right now. Had corned beef yesterday. Going to Corktown in Detroit today. I don't know what Corktown is. I'll have to Google that one. Who else likes them? Some corned beef and cabbage. Trackers are on for most any ship that's not a black market embargoed ship. Yeah, but Ron, they said early on a week or two ago there were tankers that were going through and trying to navigate without their trackers on. That's why that's been brought up and such a big deal. Carolyn Ames Kelly, yep, hers is in the crock pot now. Happy St. Patrick's Day, Debbie Richardson as well. So, okay, well, I mean, I guess that's kind of it today, y'all. I'll wrap it up. Remember, join me tomorrow. Tomorrow we are going to discuss any changes in the Iranian situation and effect. Volatility is big. Reprice risk on the day today is moderate. Be ready for that. Tomorrow we'll talk more about what's going on with the Fed and where we are. But for now, cautiously float. Again, we've been locking up till now because the outlook has been that oil prices could continue to rise. Rate sheets going to continue to worsen. What I just to point out here. Hold on, I'm sharing my screen just to bring this up one more time for you. All right, taking a look with this here. All right, we have room according to what we should be seeing rate sheets according to what we generally see on where mortgage-backed securities are. There's about an 1/8 of a point difference here. And again, if you take a look at Wednesday, it's not, there we go. Okay, take a look at Wednesday, 99.28. Take a look at yesterday, 99.26. That's almost the same right there. It's within a couple of basis points. And yet when you compare those rate sheets, that was terrible. Nope, I need this. That was terrible. Big difference in rate sheet pricing. So let me know in the comments if you're seeing that kind of difference as well, or if you see rates that are closer to what you saw last Wednesday. Ron Siegel also pointed out the spread between the 10-year and 30 years grown from 1.8 to 1.9, from 1.8 to the 1.9 range to what we are seeing today, which is about 2.15. So yeah, the spread definitely was much bigger. Mike Tebow, the Irish section of Detroit, got it. Corktown is the Irish section. Awesome. Good for you, man. Warsh looks at real-time data. Yep, he does. But there's also 18 other Fed members, and we'll see where that goes. So, all right, I'm going to wrap it up, y'all. Thank you. Have a fantastic day. I'll see you guys tomorrow. Again, have fun today. Happy St. Patrick's Day. Bye-bye.